Money, markets, and mutual funds, they're all really complicated to us, right? But for today's guests, they're not just numbers on the screen. They're stories of patience, discipline, trust, and truly believing your goals. Today, we're sitting down with Mr. Alpesh Jain. He is one of Belgaum's most leading financial advisors to talk about life, money, and everything in between.
Hi
Hi
guys,
everyone,
welcome
welcome
to
to
Made
Made
and
in
Making.
Making. Today we have with us someone who proves that finance doesn't have to be boring. From tracking NAVs in the Economic Times in his college days to building a 300 crore mutual fund and advisory business right here in Belgaum, he has become a trusted guide to families and corporates alike. Please welcome Mr. Alpesh Jain.
Hi Alpesh sir, it's a pleasure to have you on the podcast.
Yeah, how are you guys?
Yes,
I'm good,
good.
how are you?
How are you?
All nice.
Okay, so to kick things off, tell us a little about yourself and what you do.
Uh, Presently, I'm a mutual fund distributor.
Mhm.
So, managing wealth of roughly 300 crore plus only in mutual fund. Started my career with mutual fund and still going ahead with the same thing. Been part of Reliance for 15 years, wherein I've taken care of commodities, currencies, PMS, EIF, equities, to name the financial product, and we have done that.
Okay.
So, what I've realized, the mutual fund is the only good thing for the common public where you make good money.
Yeah.
So that is what I'm doing presently.
Okay.
That's in short what I do.
So I was wondering, you could have built an excellent empire in a metro city like Mumbai, Bangalore. So why did you choose Belgaum?
Uh, Very nice question. I still remember the junction where I had those choice.
Mhm.
After 14 years of Reliance, the 15th year of my Reliance, wherein there was a point where I had to choose myself moving to Bombay on a very senior position of Reliance or stick myself to where I am. Very difficult at that point of time, to be frank.
So what was your age at?
I would have been 32,
Okay.
32,
Mhm.
33 was my age that point of
Mhm.
time. Very difficult for me because yes, I was making good bucks out of Reliance. So I was on a I was a zonal of Reliance that point of time. So the thing was either Reliance or either start my own.
Mhm.
But one thing I realized once I move out of my place, so my expertise is zero,
Mhm.
and then I have to bound to whether I love Bombay or no, I have to be there.
Mhm.
So the decision lies now, yes or no. So I finally chose to welcome. The initial days it was not so easy as it looks like. 3 years of my struggle when I made my mind to be in welcome.
Mhm.
But yes, fourth year I realized I would have left Reliance early, maybe because career wise this looked to be a very nice
Yeah.
thing for me.
What did you study to become an advisor?
To become an advisor, you have something like how we have licenses for the other things. We also have to clear some certificates. So there are NISM modules. So for a mutual fund, is a mutual fund distributor module. Where you need to clear that before getting into something like this.
Mhm.
So we cleared those things.
Okay.
Did you always know that you want to be in the mutual fund area,
The finance field.
expertise, finance?
No one knows. I mean, how much you plan. My personal experience. I mean, no one knows what you're going to do in your main career, main stream. Yes, but as a Marwadi, uh, paisa खून में है. So something to my passion, and yes, when I've done everything in my financial products, so mutual fund was the sweetest of the thing. So mutual fund was the best one.
Can you explain what mutual funds are in a very simple language?
See, presently what all options an investor has. FD, which is always the easiest mode, and that is how legacy has been carried. You have extra money, put it in FD, zero risk, plus it's safe. But mutual fund is something wherein you have to take risk and your money grows accordingly. The rule of the game is very simple: low risk, low return; high risk, high return. So mutual fund is something where they are expert fund managers with 20 25 years of experience in this industry. They'll collect money from you guys, and they, with their expertise, will invest in stock market, which we are not able to do now. Because we presently we don't have that bandwidth, we don't have time, we don't have that expertise to understand price to earning, profitability, PBT. So those are the guys will study on your behalf, and they will collect money from you, and they will invest on your behalf in the stock market. So
Mhm.
that is basically a mutual fund. Is how it works.
That's very interesting. As you said, you started your career with Reliance. You've also worked with Franklin Templeton and Citi. What made you leave your career, like a corporate life, and then start your own business in Belgaum?
Again, to make you, I'm a Marwadi, so business is always there. So service, yes. At one point of time, your mind will say, yes, you should get into something of your own. You work anyhow, how many years, but your own is your own.
Mhm.
But yes, before thinking something like this, you should have that calibration. You should be confident enough that yes, you can do on your own. We struggled during part of Reliance of 14 years, so much of experience, so much of study, so much of things we have seen. Yes, there was a point where I took that call of starting my own business. And that's how things have been.
How was it like working in those firms?
Very nice. I mean, I work for see something like City and Templeton, very professional organization, going to Reliance where age is just a number. I mean, my CEO at my point of time was 38 years when I started when with Reliance. So the work cultures were different, but yes, it was for people who really wanted to excel very soon. Reliance was a better platform for everyone. So we were the founder members, wherein 100 people were part of this journey without zero branch, nothing, and we started from scratch. Starting as a center manager for Belgaum, I moved to zonal head in 14 years. That was the best part of my life.
When you first started your business, in the initial week, what was the hardest challenge that you faced?
That's icebreaker. Not easy. I mean, I took that call. Yes, I would not move to Bombay and take that higher responsibility. The challenges were big enough. Starting with zero businesses in mind. Yes, experience, expertise were there, but business was zero. So the challenge is to start a SIP of small amount, getting one-time investments, strategizing yourself. As far as Reliance brand is there, it's for us it was the brand was there, but when it came only to Alpesh Jain as a brand and building trust on clients was not that easy how it looked like in the start. But yes, challenges were there. We could go through. Started with small businesses. People trusted us. Initial 50 clients, I still remember. I owe them for this 2000 of SIPs, how we started, and then things went to a very bigger figures on all this.
Do you remember your first client?
Yes, I remember, though I'll not be able to take the name.
Yeah. How was the feeling when the first person trusted you with money? So, because trusting with finance is a little difficult. So, how was it?
I mean, yes, it made you feel that yes, you're on the right track. We started small, so my starting journey was having 100 clients with small amount, and yes, the start was good for us.
Mhm.
That's how things.
Looking back now, what's that mistake or the failure that left you with something a very valuable lesson?
Failure, yes, many a times starting from during my education itself, the failure started. We didn't select the right thing. Maybe I thought I'm good at science, so I was more keen to join science. But due to some issues, I moved to commerce. Did my BBA, MBA, specialized in marketing. Uh, Many a times we have taken wrong decisions, and such, but unless you don't know how it would fare. But taking challenges and taking risk is more important. We did that. Any specific failure as such, yes. I remember when I was new into all these things, easy money futures and option looked to be very nice thing. People made big money also. I used to see them. I also started trading in futures and option. Then I realized in 3 months time this was not meant for me. That was my first failure or first problem, which I could big money for been I could lose that those points. Then I realized yes, this something like future option with a higher risk, higher return was not meant for us. That
Mhm.
was the thing which I still.
Okay. So, if a student like me wants to become an investment banker, so what should be the path that he or she should follow so that there's no mistakes made? So mistakes तो सब बनाते हैं, but what's the perfect path, close to perfect?
First, we should understand the value of money. I mean, that has not been taught. That comes with culture and that how you, the discipline you follow on money.
Mm-hmm.
So if you feel you really value your money and that discipline is there in you on money, and it comes to big money, yeah, that's the first thing you should know.
Okay.
Second, trust, ethics. If you still have those core values in you,
Mm-hmm.
plus where you understand finances, the way stock market works. Basics, not much, but
Okay.
yes, if you understand stock market works, is at your age, and now when the digitally you are so strong, very easy for data collection, and so
Yeah.
many things are there around. So many podcasts, so many research centers where you can take help of.
Yeah.
So you should have that passion to understand money.
Okay.
Where what I realized during my point, I was very clear.
Mm-hmm.
The respect for money, the discipline for money, we had it during those days.
Okay.
I started my career in Bombay with 4,000 salary. That time also I used to save nicely in 4,000 salary. People used
Okay.
to feel here, how do you save? We did that. That respect for money was always there.
Mm-hmm.
So through that we grew. Then we started small SIP of 500 rupees from that point of time, and today we my personal SIPs are big on this. So
Okay.
that helped us, and that at your age, someone like this, if they have this core values in them, yes, this is the perfect thing which you should do. Next
Okay.
5-10 years for this industry, I'm telling you, when it's mutual fund or something related to money, would be next thing. There's no end to it.
Okay. So, like, educationally, what background should I have to become an investment?
Preferably MBA,
Okay.
CA, CFP,
Mm-hmm.
yes, those also good because I would talk what I have done.
Mm-hmm.
MBA preferably because it has a mixture of two things, finance and market.
Yeah. Right.
So not only marketing would help, not only finance would help. If you're not a street smart and not going to talk to any of your people around,
Mm-hmm.
then there's no point.
Yeah.
So a combination of finance and marketing would help you grow.
Okay.
Specifically for investment banker is what you're
Yeah.
talking.
Yeah. So now there's a segment called this or that. So I'll ask you some. I'll give you some options, and you have to choose between the two. So, fixed deposit or crypto?
Uh, no for both.
Okay. Salary job or startup struggle?
Salary to start with, get that purpose,
Mhm.
that seed capital,
Mhm.
and then work out on your ideas.
Okay. Gold or real estate?
Both I would put equally 50-50. Yes, both are must, but yes, after your 35, 40 years, because you'll have decent amount of money there,
Mhm.
both are very important.
Okay. Risk or stability?
Initially, risk,
Mhm.
stability comes
Later.
once you are on your 40s.
Yeah. Equity or debt?
Both are different. Equities, yes, initial days, equity, take risk, take maximum risk, you have lots of time for that.
Yeah.
Debt portions are different. So if something which you don't want to take risk out, so any age that doesn't matter.
Okay.
Some portion of money you don't want to risk out, so it's always a debt. Equity is something you don't need another 5-10 years, so that for that is equity.
Okay. Indian stock market or US stock market?
Money is money. Money doesn't have any color.
Okay.
So I would not mind anywhere globally if it gives you good return.
Okay. Warren Buffett or Rakesh Jhunjhunwala?
Being in India, Rakesh Jhunjhunwala, Warren Buffett is good on their friend, but yes, I am a diet follower Rakesh Jhunjhunwala.
Okay. What's one thing which you have learned from Rakesh Jhunjhunwala which you apply in your day-to-day life? In working?
So many things from London, from that guy. One thing I've learned ki yes, health is very important, which he realized very late. So during in last year of his when he could not survive, he could see him. He clearly mentioned he made everything well, but he could not spend much time for his health.
Yeah.
So I would recommend everyone around. Health is more important than whatever we're talking about.
Yeah. Health is wealth.
So you have health, still life goes on.
Yeah.
So, you've built an AUM of 300 crores in just a few years. What's been your biggest differentiator from traditional advisors?
Okay, what is the USB about me? We can talk about this here. See, first of all, 300 crore figures looks big, but for me, I'm not more into retail clients or something. So, what can go wrong for me is, say 5-10 big clients withdraw their money, I can still have that fear of falling my AUM. The biggest differentiator for my business, though I started late, we had people into this industry 10 years, 15 years, 20 years before being into mutual fund. What I could see is their bandwidth was being into retail, 3, 4, 5,000 plus clients. very difficult to manage. And when it comes to a place like Belgaum, one client who's not happy with you can destroy your 10 of your clients. So that I realized is very early stage. So we made a point that no, we'll not get into more numbers of clients. We will go into quality of clients. So we went more into corporates, family accounts, HNI, super HNI. That was the way we could strike the deal. And though I don't have a proper mutual fund office, so that I entertain my walk-ins. We have corporate clients, so we go and enter. We go to their place and how we. That's the game changer for
What is an HNI?
a high net worth individual.
Okay.
Someone whose investment capacity is 50 lakhs.
Yeah, an entrepreneur. An entrepreneur.
Not really entrepreneur. Anyone has a big money.
Okay.
Whose net worth is.
Yeah, whose net worths are big to
Yeah.
invest.
So, as a financial advisor, do you think India can produce a firm like Goldman Sachs or JP Morgan?
Yes, but it takes time.
That takes. But
From we are moving from now developing country to a developed. So 4.5 trillion dollar to say 12 13 trillion dollar if we move the way things are planned.
Hmm.
And yes, we'll have something like this coming. Not at those scale, very difficult, but yes, we would be fair enough. We have robust systems. Our banks are very robust.
Yeah.
So whatever we'll do, we'll have a robust system. So it's
Okay.
not it's stable.
Mhm.
That's how Indian will build their
Okay.
finance systems.
Should an 18-year-old with 10,000 should they invest first or insure first?
Uh, if you ask me personally, at your age, investing only is more important. How do you ensure if you don't have money?
exactly.
So first you have to make money, right? How do you make money? You have to invest. So keep investing first in your initial days. Then comes the stability, consistency, ensuring yourself. That after age, automatically you will realize when do we do that. But initially, yes, keep investing. Don't worry about risk and not take the risk. Unless you take risk, money will not come. Don't panic the way things. Because Indian history, what I've seen from 90s, there's so many scams which has happened. Arshad Mehta scam, with the tech bubble. We had the COVID recently fall. Markets were at its low, but in 6 months we could cover the when we were lifetime high in 6 months of our COVID time. So we have to trust the system. Yes, risk is more important. Keep taking risk. People still feel ki yes, my 10,000, how does it make difference? No, whether small, big, keep investing. After 5, 10, 20 years, these amounts are huge, but you have to trust the system.
Okay. So, what's your view on the Trump recession, the Trump tariffs?
Uh,
Will it affect your business?
yeah, why not? Everything matters for us, right? Economically, if you see India is going strong, if something like this happens, we are stuck somewhere. So markets are all just waiting for some clarity on all this thing. Then maybe it will start moving. Numbers looks good on our stock exchange. Our domestic DI is pumping in good money. So without the support of foreign money coming in, we are still stabilizing the market. That's a very good sign. You would have seen normally 2000 those years we were more dependent on FI money.
Mhm.
But now DI money is so big, it is stabilizing a stable market these days. So if something positive coming globally and foreign institutional money keeps coming back, sky's the limit.
But don't you think this Trump tariffs could lead to recession in India? Or
Even it's a
overall?
global thing, right?
Okay.
Not only for us. So
Yeah.
if something like recession hitting a US, so that's how globally it will work.
Okay.
So you can't deny the fact that anything happen in US, we will surely have that impact.
Okay.
You can't say ki something there and we will be safe. No. Something goes wrong there, we have to accept. We've been 43, $44 trillion economy, so we have to
Yeah.
accept the fact.
I heard that they have a 13 trillion debt. They have to pay some money this year, so they are putting tariffs all over the world. So that recession happens, and people invest in the U.S. bonds, which is the safest option right now.
These are two different things. Yes, the debt is huge when it
Yeah.
comes to US. It's huge. I mean, I should not talk about those figures.
Yeah.
And they're building up huge debt. This 45 days of US, $1 trillion has been added in just 45 days.
The debt.
It's a huge amount of debt.
Yeah.
But tariffs and this, I would not want you to mix up these two different
Yeah.
things.
Mhm.
So tariffs is something which Mr. Trump wants to take it based on his experience.
Okay.
That is the legacy of US in all the presidency.
Okay. So when we talk about investing, we talk about SIPs. So can you explain what an SIP is? What a SIP is?
See, a money which you like a salaried person,
Mhm.
he gets salary every month.
Yeah.
So he can invest comfortably 10, 20, 30,000 because he knows his salary will come, and out of that portion he can invest in a SIP.
Yeah.
So those are the money for SIP where on a disciplined way, on a regular mode, every month you keep investing till you can afford to, you can invest.
Okay.
So that is SIP basically. So
Okay.
whatever may be the amount, it can start with a minimum of 100 rupees also. That's the way the systems are placed.
Okay.
100 rupees SIP also.
Okay.
So that's the disciplined way of investing.
So how is it different from fixed deposits?
Fixed deposits is something money which you have now.
Okay.
It's not like a SIP which will keep coming every month.
Okay.
So you have money now. Now the point is where you want to invest. Whether you want to invest in a fixed deposit or a mutual fund.
Okay.
So SIP is part of mutual fund, wherein you either invest that monthly wise, or either you one time you invest, you have 10,000 rupees, you want to invest in mutual fund, one time.
Okay.
So that is how you can invest one time mutual fund, or the same 10,000 can go to FD.
Okay.
It's all based on the risk appetite and the experience that person has about all.
Okay. So what's one mistake that most of the people do while investing in an SIP?
One important mistake they do is they feel Google is the easiest solution for everything. It's like you are not well and you are trying to figure out what would be the remedy and trying to figure out the medicine for this. It doesn't work that way. What's on Google would not really be the reality. You need a good financial advisor to you to understand your requirement. There's something called goal settings. There's something like risk appetite of yours. And after all that parameters, we come to a point where do you need to invest? Which scheme would be suitable for you? There are 5,000 plus mutual fund schemes. So very difficult to figure out which you want to invest.
Yeah.
Right? So that's our role. So that's what I all keep telling all the people.
Okay.
Do you think AI can manage this job better than humans?
I don't know because it's still in the very initial phase of it. But as of now, no. Another 5-10 years, I don't see any issues coming like this because every individual is different from the second.
Yeah.
So his risk appetite, his goals, his strategies are different than the other. So there is no universal rule I can put across, and AI would work on that on a simultaneous and gives you advice based on those. No, it's very difficult. As of now, I don't see any threat to us as a AI coming into picture. But yes, 5-10 years down the line, you never know something, and we also may change accordingly as well.
Yeah. Do you think the MNCs are adapting to AI in investment banking sector?
100%. Including our softwares, the way we do research, it's been very easy for us now.
Okay.
I don't have to go with 100,000 plus research. We have everything the way I want. My things are all set in my system, and we see we spend time hour a day for that, and it's been taken care. So we are upgraded with what is happening instead of spending the whole day figuring out information. So AI is helping us, giving us the softwares what we need, giving us specific is what I'm looking at based on what schemes I suggest to my client. That way, that AI is working perfectly.
Okay. So
Let's suppose that I have invested a large amount of money in the stock market, and then the next day the market crashes. Then what should I do next?
That's what I say. Patience and no panic is what if you have. So best example is COVID. Where everyone has seen that, right?
Yeah.
So you would have panicked, say during COVID, markets were 50% of from the highs, and you would have sold out. You would have booked your losses. So what would happen today? You would have repented for that, right? Because today markets are far ahead of what those COVID rates.
Yeah.
So if you have discipline, if you understand this business is well, that is what we keep telling long term. So you go, it's like buying a land basically. If you buy a land, a land, and if it goes down, it doesn't matter, right?
Yeah.
Because it's a land with you, so you don't care much. If it goes up, also you feel good, but you don't sell it. That way, you have to trust this equities and mutual fund. Then you will realize the importance. Even if it goes down, don't worry. Something is there with you. So time will come where you will sell it for a good rate. So that you have to trust the process. Then only you invest. If you don't have that risk appetite, please don't do that. I always tell my people, if you don't have that risk appetite and you may panic when markets are very choppy or very volatile, please don't invest.
So you should just not cash out.
You should not cash out. You are a mutual fund. You are not a trader, basically, right? So you are my personal. You should not cash. You should not panic. Any point of time, wherever people panic, people lost money. From the history of India, if you see, there were so many big time falls happened. People who cashed out, people who panicked during COVID. Also, I could see people panicking, and still they remember me for you were the one who said don't sell. If they would have not sold, money would have been different multiple.
So whether it's real estate, gold, mutual funds, stocks, anything. So what's a common mistake that everyone do while investing in it?
Greed.
Okay.
The greed is what everyone has that platform: gold, silver, commodity, equity, mutual fund. So your greed will always pull you down.
Yeah.
So something like a lakh invested goes to 2 lakhs, and you feel greedy and you remove your money, and again you come back. Where do I invest? That's greed, basically. You have invested. That's the process. Let that lakh grow decently enough, fair enough. And whenever you need money, you please use that instead of behaving greedy and finally figuring out, did I do a right decision? Don't do that. Greed is the first factor which always people make. And the other one is the panic thing.
Yeah.
You buy something for a lakh and something goes for 80, 70,000. He tries to panic, and that's where the problem is.
Okay. So basically, the less is more.
Yeah. You're a great advisor. So, what books and podcasts or mentors do you follow that you would recommend to the younger generation?
Books as such, I'm not a good reader, so maybe I'll not be able to recommend to some books. Yes, movies are there, good time movies are there. I keep upgrading. So the way technology is growing, also cyber crimes are growing more. So I suggest people, there's something, there was a movie on Netflix, Jamtara, where how credit card frauds used to happen.
Yeah, I've heard
So
of
I
it.
always tell people, please see that movie. There are a podcast, one of Mr. Nikhil Kamath is coming with all good podcasts. So that's what I would recommend people to see. There's something from Zerodha where they make people, especially the college going guys and all, how to upgrade yourself on these things. So you have to follow from them. Zerodha has that one site where
Mhm.
they release podcasts on every day-to-day basis.
Yeah.
That is what I would recommend you as of now. So, and there plus many other podcasts, financial podcasts we have. Please follow those guys. You would surely upgrade yourself. But yes, one thing is very important. It's your hard-earned money. Take information from everything, but decision lies with you. For that, you have to upgrade it.
So, do you remember the first memory of when you started investing?
Yeah, very much. I still remember there was India Bulls IPO 18 rupees, which listed at 22 rupees.
Hmm.
So I still remember because I did not get any allotment on that.
Okay.
So we bought again at 23, 24 those shares. So my journey has been very long on all this. So we've been many mistakes. It's not that I'm sitting here and I've done it. We've been doing lots of mistakes,
Okay.
but we still know how to overcome out of it, and we at every point of time we ensure things move again back. But yes, already there is no futures and option, no crypto. If you ask me personally, I'm always against all this.
Okay.
It's easy money, yes, but uh, I don't know. It has no underlining. If you see crypto in specific, there's no underlining. It can go to $30,000. It can be a lakh plus dollars. It's crazy movement. So,
Have you ever invested in crypto?
no, I would never. I go in and out about crypto. I keep reading about it, but though personally, if you ask me, I would not want to invest.
Okay.
We had Mr. Bill Gates telling me no, crypto be at free of cost. Also, I'll not buy. So I'm on those words. I'll not get it.
Okay.
But Bitcoin is like a really profitable.
Yes, it gives you money, no doubt, but there's no underlining as such. Today, a lakh plus, maybe coming to $60,000 would not be a big deal. I'm telling you,
Yeah.
because it has no underlining. What see a company, say a big company declares profits, declares mergers, acquisition. On that basis, the price movement goes. The quarter they don't make good money, the price goes down. On what basis do you judge a crypto?
Okay. We can't study the charts of crypto.
Charge doesn't matter. Charge is what you would see the movement. But
Okay.
what are the underlining? What is the profitability of a company? Who is there behind this?
Yeah.
Who is it?
We just know his name, but Satoshi something. I don't.
Those are all pseudo names.
Yeah. So, apart from investing, what's some hobbies or a passion which you follow?
Lately, more of health, so yoga, CrossFit,
Mhm.
been, traveling always, yes. Lots of things to learn when you travel. That's how life is after 40.
Okay, so now we'll do a segment of rapid fire. So I have 7 questions, and you just have to answer them without thinking. So if you had 10 lakhs to invest right now, where would you invest it?
10 lakhs now, yes, equity market straight into mutual funds of equity. Markets are lying low based on tariff, so I would take that opportunity now.
Okay. What's one financial habit that Indian youth must stop immediately?
Crypto. Stop following the crypto.
What's the biggest money mistake that you've seen rich people make?
Very rarely I see any rich people making mistakes because money covers up everything.
Yeah.
So I don't remember anything. They've been smart. If you see, they are collaborating on the type and we are competing below. So I don't have anything.
Uh, do you think AI can manage money better than humans?
No, no, not at all. Goal settings and people to people things vary. So I'm not sure.
If you lost everything tomorrow, how would you make your first lakh back?
Easy for us now because once you have upgraded yourself, this mind is working hard. So making money would not be easy. Though mutual fund also you don't require any initial investment, stock buying or anything. You can start fresh. Just
Yeah.
the exam you clear, which is again on the mind,
Yeah.
and you are done that. So it should not be a problem.
100 crore today or a guaranteed 15% return for life?
100 crores makes sense because out of that 100 crores, 15% would take care of my stand-up meal. So I'm okay by taking 100 crore rupees.
Um, what's one financial myth that's not true?
Uh, Markets will always be this way. No, markets will be this way also. That's the financial myth everyone should know. And secondly, beware of ULIP. Something there's a component called unit link insurance plan. I would never suggest to anyone buy a ULIP.
If you had to give 3 financial rules to someone like me, who's a student, to become financially freedom till the age of 40, what would be the 3 rules?
Okay, as in when you start earning,
Hmm.
whatever may be the amount or whatever you're doing, either you're into your business or either into your salary, your initial levels are very important. This is where which will decide your future. So every rupee, small, big, anything is important. So keep investing.
Okay.
Whether you buy a mutual fund, whether you buy some shares, small amount of gold, yes, keep doing that because that small amount now would help you at those points.
Okay.
Avoid loans as much as possible. Avoid using a credit card as much. If you ask me personally, still I don't own a credit card.
Okay.
I still don't own any single rupee loans. No one can come and tell me I have a loan. No, I don't have a loan. So if you follow those basic disciplines, I'm sure you are through with your finance.
But what I've noticed in my generation, so people keep a lot of credit cards and they use it for transactions and they get the points. They redeem it for something else. So is it good?
I've done my deep study. We have done a deep dive into all these things. No, I would still say no. Better avoid a credit card unless you are a regular traveler traveling the globe, where a credit card is must. Many a times your debit card would not be accepted. Yes, that makes sense. But as a student, as a fresher, you're starting your career, doesn't make sense. It becomes very easy money. I keep telling people the same thing. Say you swipe your card of 10,000 rupees of shopping, that same 10,000 in your hand, then you see the difference how it feels. Now you tell them to spend the same 10,000 which you have in cash. Then you'll realize it's a big money.
Yeah.
Digital money is always easier. GPay looks to be always easy for you, but realities are different.
Yeah.
It also increases greed.
Read and you become more of you will start buying things which you really don't need.
Yeah.
Then
Yeah.
there will be a time when you have to sell things which you really need. So
Mm.
you don't get into that trap, right?
Yeah.
What advice would you give a 17-year-old that's starting their money making journey today?
So I'll still repeat the same thing again. Once in your initial levels of career, discipline about money is very important. Every rupee counts. Avoid credit cards, loans, whatever best, and never underestimate you're making small. So investment is for big. Mutual fund is for some rich guys. No, mutual fund is. I started my thing with a SIP of 500 rupees at that point when I was making 4,000 rupees a month in place like Bombay where the expenses were it is sky. So never underestimate the years you are starting small. Those 500 rupees a month, that point of time today is a big amount, which you will realize it very later. So discipline of money, yes, it's not always investment we take care of. You have to work hard, discipline, and in all this, don't forget health. That's very important, which people are forgetting. health, if you some point of time you'll have lots of money coming in because of your planning, but health would not be with you. So that advice I always tell my people. Yes, health is very important.
Okay. So before we wrap things off, what's one business lesson which business schools don't teach?
Uh, I still see lots of things are missing. We still follow that old tradition. I don't remember when I would have used those things in my real life. In my entire career, whether it's Reliance, Templeton City, no one asked me what percentage of grade I've taken. I'm telling you frankly.
Yeah.
Do you have an MBA degree? Yes. From which college? This. That's it. No one asked me what was the percentage I scored. I'm telling you. So I was a good school, I had my good scoring on all those things. But no one asked me at those points. So, okay, being learning only, you have to be extra smart. I would always tell students specifically, कि learning, yes, you should do it, but you have to be smart also. For our industry, something like this, futures option, we had it in books also. But I was by hearting all those options, premium, spot, futures. But now I see in reality when I personally trade, when I've seen things on real screen, live, where real money is there, things are different.
Mhm.
So my advice would be this only: the practical experience is more important.
Yeah.
Books all are looks to be outdated. You should have every month at least one guy coming from finance industry and talking and addressing to the student, which is not happening. You have lots of people, expertise, professionals around. They would surely come and address students, and that experience would really help you on the real life work. That is missing. So something like this, if someone takes initiative, it surely helps. And then exams of NISM for a mutual fund for operational based. If you're really looking something into operations of finance industry, there is an exam for DP operation. Clear those exams. So once you're out of your MBA and once you're out of your career, your halfway is done. So any broker would surely, if you have the certification, you have been absorbed in this.
Okay.
So those things has to be implemented at college level.
Mhm. To learn those things, do you think an internship does a great work, or like starting something of your own helps to be a street
Both are
smart?
very important. Internship is before you take your job in hand. So internship, I still remember I did my internship in Britannia. Lots of hard work, timing. My corporate culture started there. Though I was not being paid, but a brand like Britannia hiring me as a trainee was something big for me.
Mhm.
Bombay, traveling in a local train, reaching railroad office, zero salary, but still that interest level, still that commitment what we used to have in during our internship. Today also helps, right?
Mhm.
What experience I remember the day whom I used to report, the first day, the last day, they gifted me such a big biscuit hamper. I remember those things.
Okay.
And that helps in my entire journey, right? This is how I started my experience building.
Okay. So it was a very refreshing conversation with you. We learned a lot from your advices, and yeah, it was an honor to have you on the podcast.
Yeah, all my pleasure on this.
So, to our listeners, wealth is not just about money, it's about building the right habits at the right time. So, until we meet in the next episode, keep learning, keep building, and keep making. Thank you. Thank you so much.
Thank you.